In the studio with me is who was conducting that interview with the minister. It's Chris Bishop, the MD of the excellent Forbes Africa magazine. What was the mood? What did you get from the minister there? Was he ebullient? Was he defensive?
Quite a lot of reaction. I mean, I thought he was quite candid. I mean, a lot of the analysts said, oh, breath of fresh air. He's talking about a lot of things the investors want to hear. He's talking about rule of law. People like to hear that. He's saying you can go to the courts if you want to challenge it. You will have your rights respected, which is good. He's talking also something else that a lot of people have been talking about is that separating oil and gas from mining in the bill, which is going to happen. The only criticism, most analysts say, why doesn't it happen now?
Yes.
Why is it still going through Parliament?
It's always the same. It's going to go through Parliament. There's going to be workshops. There's going to be Indabas, etc. Wayne McCurry, are you fed up with the red tape?
Look, I think there's 2 points to make here. First of all, any removal of uncertainty is a positive thing, but I do agree it's going to take a long time to come through. You know, once you know what you're letting yourself in for and who owns what and who's got to pay what to whom, you can make an assessment as to whether you think it's viable as a business venture or not. So as long as the rules can be bad, by the way, as long as the rules don't keep changing, you can make an assessment. So if the rules are bad, you might take your money somewhere else, but at least you can make a judgment. But I think the second point is equally as important. Somehow I think there's not an understanding in government that capital doesn't owe an allegiance to anyone. It will go anywhere. So if you make conditions too onerous for investment in South Africa, the investment will simply go somewhere else where the conditions are less onerous and where, quite frankly, there's a higher return on capital. So unless you have...
It's a long question, Wayne. It's a long question. We've only got a couple of minutes left. So, Chris, I think he gets the point here. The point is, we've got to make it easy.
Well, that's the thing. I mean, another thing as well was a lot of scepticism that he mentioned in his speech was getting tough on the unions and these violent strikes. He said 5 months at platinum last year was unprecedented and want to make sure it never happens again. They said they'll take people to the courts, they'll jail them, they'll charge them, they'll imprison them. But the reaction after that amongst the mining people I talked to, they said, well, yeah, okay, let's see it happen. Yeah. Let's see the first case go through. Because there's still that disconnect between what's being promised and actually what's likely to happen.
What's very interesting to me is that it suddenly stared at me in the face that we saw a 46% fall in profit for Anglo American Platinum, which is the largest producer of platinum group metals in the world, and under the ground on which we trade is 76% or 77% of the world's assets of platinum group metals.
$2.5 trillion.
So we've got a monopoly, and we can't make money out of a monopoly. And although we know about this, when you see these figures in front of you, you say to yourself, please, let's do something about it. The Mining Indaba surely must do something.
But even in the speech, I mean, the mining's crying out now about this power shortage. I mean, I spoke to Harmony yesterday, and they said they lost 50 kilograms. They lost nearly $2 million in one quarter just from shortages, not even power cuts, having to cut down the hoisting and the milling. Now, in his speech, all he said was we're going to sign an agreement for 2,600 megawatts in 2023. And then someone joked afterwards, well, we'd rather have it now. And he said, well, we're getting private producers signed up, et cetera, et cetera. But there was no concrete thing like you're going to have 5,000, 10,000 extra megawatts in the next 6 months, which is what most people want to hear in business, because it's going to cost the industry millions more in the next 3 years.
Wayne, when you hear what we've been talking about in the last few minutes, if you were an overseas investor coming to South Africa for the first time and you knew what our resources were underground, would you say to yourself, well, yes, I'll take a chance and invest, or would you say, I'll wait for 2023 when we get a bit of power and maybe when the unions and the government come together and can sort themselves out and agree on a reasonable working condition and a reasonable wage increase each year?
Look, Lindsay, mining capital invests anywhere in the world as long as you can make a decent return commensurate to the risks involved. So capital goes to far worse countries than South Africa with no rule of law, etc. But then the return has got to be so much higher. So two equal resources with two equal profit margins, capital will go to the one that's easiest, that has the least amount of restrictions in it. And if South Africa, unfortunately, is facing an electricity restriction, they will go somewhere else where there's surplus electricity. So this whole electricity thing clearly is not good news, but we all know this.
Yeah, is that going to be addressed, Chris? I mean, again, what's the mood? Do you get the sense that people are actually going to say this time, yes, we've made a mistake, this is what we're going to do about it, we're going to address this situation instead of pussyfooting around the situation?
Well, I think Ramaphosa, to be fair to him, I think he's trying to actually get some sort of certainties forward. But you've got to look not only competition from around the world, but a competition in Africa. I mean, I was talking to the minister, Mr. Nee Mills of mining in Ghana, and he was saying that they turn over about 4.4 million ounces a year, and they've got a 5% royalty. And not long ago, they were thinking about increasing it. And there was a big debate in Parliament, and they decided, no, we're not going to do that, because the commodity prices are falling, everyone's a bit jittery, let's leave it where it is.
So they were flexible?
Yeah, flexible, and it still gets 40% of their forex, and something like 25% of their total revenues in the country. So that's what I'm saying. It was just a little bit of thought, but actually we don't want to scare away the big investors who are digging up our mining. And gold mining's on the up despite the price. So, I mean, just shows how a bit of pragmatism sometimes can overcome some of the rhetoric.
Chris, we'll, of course, wrap up with you in the next couple of days. It's been fascinating Indaba already. I think even more than last year. Last year I thought was a little bit anemic. This year, more of a talking shop and more of a constructive talking shop. Would you say that?
Yeah, I'd say that there's perhaps a little bit more trepidation, a little bit more fear this year, but I think also there's a lot of dynamic talk. People are talking about how the industry can save itself, what people can try, and also the new markets opening up from Cote d'Ivoire. They're all into gold. South Sudan, Kenya, all kinds of places opening up, not just this country.
Okay, Chris, please go off and go to your meetings. I know there's loads of meetings after hours. Have good fun with that and get some stuff for us for tomorrow and the next day. Chris Bishop is the MD of Forbes Africa.